Everyone is watching the SpaceX IPO. But the real question is not just whether SpaceX pops. The real question is which smaller space stocks could move with the excitement, and which ones could trap retail investors after the momentum fades. This is not a buy list. It is a risk-ranked watch list. SpaceX can create attention across the whole space sector, but attention is not the same as durable value. The goal is to separate real businesses, hype trades, catalysts, and dilution risk. SpaceX filed for a public listing under the proposed ticker SPCX. Reported IPO terms have pulled huge attention into the sector, but final pricing and proceeds should be checked against the final prospectus. Until then, treat the IPO as a catalyst, not a guarantee. When a famous private company goes public, money often searches for public relatives. Traders look for launch companies, satellite companies, defense space contractors, suppliers, and ETFs. That can lift names quickly, even when their fundamentals are very different. The cleaner way to think about this is a space basket: Rocket Lab, AST Space Mobile, Planet Labs, Intuitive Machines, Viasat, EchoStar, MDA Space, Redwire, Momentus, Sidus, and Filtronic are not the same trade. They sit in different risk buckets. For this video, I would rank the smaller names into 4 profiles. Redwire is the quality space and defense infrastructure name. Momentus is the speculative space tug trade. Sidus is the catalyst plus dilution risk name. Filtronic is the SpaceX supplier story. Redwire is not just a meme space stock. It is more of a space infrastructure and defense technology company. If SpaceX excitement pulls investors into public space names, Redwire may be seen as one of the more serious infrastructure plays. The Redwire bull case is built around real programs, space infrastructure, national security, and backlog conversion. The proof gate is simple. Revenue has to keep growing, margins have to improve, and backlog has to turn into cash, not just headlines. The risk is that Redwire has already attracted attention. If the stock has already moved before the SpaceX catalyst, the next move can be messy. A good business can still sell off if valuation runs too far ahead of execution. Momentus sounds exciting because the business is about in-space transportation, hosted payloads, and orbital services. That is the kind of story retail investors notice during a SpaceX cycle. But this is exactly where story and balance sheet need to be separated. The Momentus question is not whether the mission sounds futuristic. The question is whether revenue, cash, and financing can support the mission. If a company needs repeated financing, dilution can destroy long-term holders even when the narrative sounds powerful. Sidus has a current catalyst. The company said it was expected to join the Russell 3000, Russell 2000, and Russell Microcap indexes aftermarket close on June 26, 2026. That can create attention and potential index flow interest. But Sidus also shows why good news can still be dangerous. The company closed a roughly $100 million offering at $5.08 per share or pre-funded warrant. That kind of financing can help survival, but it changes the shareholder math. Sidus also reported a very small revenue base compared with the size of the story. First quarter 2026 revenue was about $359,000, up from the prior year. But the company still had a gross loss and negative adjusted EBITDA. Filtronic may be the cleanest SpaceX supplier story in this group. The appeal is not that it is another launch company. The appeal is that it supplies radio frequency and E-band technology used in high-performance satellite communications. The important wording is this: SpaceX has warrants that could allow it to take up to a 10% stake in Filtronic. That is very different from saying SpaceX already owns 10%. The distinction matters for credibility. The risk is liquidity and concentration. Filtronic is smaller, less liquid for many US investors, and the SpaceX relationship can become a double-edged sword. A major customer can validate a supplier, but it can also create dependency. Here is the ranking. Redwire is the quality, space, and defense play. Momentus is the speculative space tug trade. Sidus is the catalyst plus dilution risk trade. Filtronic is the supplier story, but with liquidity and customer concentration risk. The SpaceX IPO could reprice attention across space stocks, but after the first reaction, the proof gate is still the same: revenue, cash flow, dilution, backlog conversion, and customer concentration. This is not financial advice. Always do your own research.